Good morning, everybody, and authorities, ladies and gentlemen. Let me first thank the organizers, President Farina, and all the ANIA staff for today's event. It's a very important conference, very helpful to learn from other experience. We are witnessing an exponential increase in catastrophic events due to natural hazard. This has been clearly demonstrated by all the climate conditions and the events in the last months, but also in these days, unfortunately, in Italy and in Central Europe. ANIA, representing the private sector, has done well to propose, as part of Italy's G7 presidency, this event in partnership to explore potential solutions for increasing risk coverage through greater public-private collaboration. Now we can go into a more detailed discussion. It's wise to start discussing what has been accomplished so far at international level, in particular by those countries who have already implemented a PPP scheme for catastrophic natural events, and try to address all the challenges in shaping a concrete scheme at national level. I've been asked to complement the excellent presentation we have just heard from the previous speakers with a very brief introduction that outlines the state of the art. This will help set the stage for the more detailed interventions from our panelists. Thank you very much for those participating in the panel. We'll examine into the specifics of what has been done in the various jurisdictions. At G7 level, as you know, with the assistance of the UACD and the IIAs, we have benefited from those best practices in preparing the framework document adopted by the G7 Ministers of Finance in Stresa. Let me first emphasize that there is no single ideal model of public-private partnership, as you know, for natural risk management that fits all situations. Looking at the international landscape, many countries have adopted forms of PPP's collaboration for managing natural disaster risks. I'm pleased to say that Italy can now be added to the list of such countries, thanks to recent legislation adopted by the Parliament. For the detailed discussion and the panelists, I would just like to mention the key differentiating factors of the various national systems. First, the types of risks covered by the system, depending on the country's exposure to various catastrophic risks. Then, the assets included in the coverage, such as residential and/or commercial properties and public assets. Third, the methods of participation in the system, which can be voluntary, mandatory, or semi-mandatory. Then, the way premiums are determined, possibly with incentives for adopting risk reduction measures. The extent of the coverage guarantees, the role of private insurers, whether they operate individually through a pool or with mandatory reinsurance cession. The role of the state, whether as a reinsurer or a guarantor of last resort. And finally, the overall capacity of the system to handle the whole portfolio of risks. It will be particularly interesting to hear from the panel experts about the specific choices made by various countries, the most evident benefits of those decisions, as well as any challenges encountered and adjustment made over time, especially given the rapid evolution of natural phenomena and the damages they cause. Let me conclude highlighting the recent Italian development in our legislation. The budget law passed last December established a public-private partnership framework requiring Italian businesses to insure against catastrophic risks through private insurance companies. To help insurance companies to manage these risks, such as SPA, that is a 100% state-owned company, is authorized to cover up to 50% of the indemnities with a limit of 5 billion euros for the first year. This coverage is provided through a proportional reinsurance system, with direct insurers paying a premium at market conditions. So it's a market condition scheme. Such obligations are guaranteed by the state by law upon first request and without recourse. The budget law assigns the task of defining further operational and implementation guidelines for the insurance schemes to a ministerial decree that is going to be finalized. In consultation with ANIA and the main insurance companies, the Italian authorities are working on finalizing the necessary implementation regulation to make the system fully operational. This includes setting the criteria, identifying events eligible for compensation, coordinating with existing insurance regulation and supervisory measures. Through insurance, businesses shift the financial risk of damages from natural events to insurance companies, which should alleviate the strain on public finance. As you know, CAT-NAT is one of the main contingent liabilities on the budget. The broad adoption of private insurance systems working alongside the state's emergency response efforts could improve fiscal sustainability in the medium to long term. This would enable public funds to be directed toward priority and strategic initiatives, such as strengthening public infrastructure, investing in prevention and climate adaptation, or directly supporting individuals impacted by disasters. So, in a snapshot, the scheme envisaged by the Italian legislation in a step-by-step approach is mandatory only for enterprises. Public-private partnership is based on the reinsurance scheme, where the public reinsurance is just a possibility, not an obligation for insurance companies. Here in brief are some points I hope will be useful for our discussion. I will give the floor to panelists and the moderator, and thank you very much for your attention.